After entry, it gives this fake type of a climb into profit and then just reverses on you right away. And this is also, as mentioned, one of the key factors why traders really struggle to maintain high win rates. So one of the most common questions that I get from you guys is how to know when we are trading towards a low resistance price action, a low resistance target, and then we are trading and pushing through a high resistance path. And as you guys know, something that I talked about a lot before is the importance of trading towards low resistance path. And what I'm talking about is when we have low resistance path from our entry, let's see, this is our entry towards the target. When it's a low resistance path, the win rate of our trades improves drastically. And then we have high resistance path towards our target. And again, what I'm talking about is the path from our entry to our target. This is the path. Then we have two different scenarios. Sometimes it's right in the middle when we have some low resistance signs and some high resistance signs. So obviously it's important to keep in mind that we will have situations when it's right there in the middle. But ideally, what we want to focus on is this right here, low resistance path from our entry to our target. Those traders who focus only on execution timeframes and miss some important details, trying to trade against the flow, pushing towards high probability PD race and hoping to see price slice through high resistance environment, high resistance path from entry to target. This is usually when they see price run a little bit in their direction and then melt right to their stop loss. Sometimes it just melts to their stop loss right away without even giving this push to the upside. And trust me, this happens more often than not. And a lot of traders are not even aware why some trades win, why some trades lose. All they focus on is entry pattern, ignoring all the lower time frame development. If we have lower time frames, middle time frames like 15 minutes, execution time frames all aligned and moving in sync. And then it's a full-on blurry vision and we don't have clear alignment. Then daily time frame, let's say, is completely against us. All these signs matter and the highest probability type of trades are born when they have higher time frames, giving us the direction, giving us clear momentum. We have full alignment on the lower time frames, waiting for the execution time frame alignment, then time of the day. And lastly, what we want to focus on is clear development, clear target, and low resistance path to take profit right here. So this is the formula to a high win rate. All right, so it's MF theory. Let's now talk about practical use and how everything looks like. So one of the clearest forms is obviously when we have a higher time frame target, a higher time frame draw on liquidity. We know that just to trade in some direction just because we think that we have an execution time frame entry model or stuff like that, this makes no sense. What we always want to see is a clear zone, clear magnet area that we will be pushing towards, something that we call draw on liquidity. When we have that, what we want from the lower timeframes and execution timeframes now is a low resistance path. So now what I'm talking about is when we don't have SMT in our array. Another thing that you want to keep in mind is when we don't have clear, sharp structures. And what I'm talking about is if we are looking for a long, let's say right here, price bottomed out, left alignment kill zone log today, left some SMT, let's say, and we see price starting to trade towards our magnet area right here. What we don't want to see on the left is price consolidating, running all that liquidity, running buy-side liquidity into bearish PD race, leaving sharp structures. Because then we go to present time and then we are trading and looking for longs right into this strong structure. This is the high resistance path right now. This becomes a barrier. And the more barriers we have right here, if we took a long position, let's say here, this is when we have a high resistance path. We took our long position looking for price to trade towards our main draw on liquidity. But what we have from the lower time frames and execution time frames is, let's say, clear bearish order block right here, bearish fair value gap, and right above, let's say we have a strong high resting right here. Then let's say looking higher, we have even more strong structures right here. So what we have in this type of area from this entry, right, moving forward, we already have bearish PD race. Then we have one barrier, another barrier, and this whole delivery from entry to take profit becomes a high resistance path. And then we have high resistance path. This is then price usually tends to do this after entry. It gives this fake type of a climb into profit and then just reverses on you right away, pushing away from these strong structures and bearish beta race. And this is where a lot of traders fall into these traps. And this is also, as mentioned, one of the key factors why traders really struggle to maintain high win rates. Not only because obviously they skip some parts, they have such urgency, such rush to take trades, and they simply skip some parts out of that formula that I mentioned before. If they have all of these steps steps right here that we want to see before taking a trade. They skip some parts. They see, let's say, execution timeframes looking nice. They see, let's say, Asia range liquidity, and they take a trade. Obviously, it's almost impossible to maintain a high win rate. Then you are ignoring some of the most important puzzle pieces like higher time frame, lower time frame, middle time frame, alignment. But let's say if you are a trader who is not ignoring anything, you're waiting for all of these things to align, this is when you can expect your win rate to skyrocket, especially if you again pay attention to what price action we just had on the left before executing your trade. So now an example of low resistance path. This is exactly what is called a low resistance path. Notice that price action right here was forming these round formations. Even this structure here, even though it ran some buy side liquidity, overall you can see that this whole delivery right here was forming during low volume type of an environment, low volume conditions, because all of these candles, notice that they are very small, price is very corrective, price is leaving these round formations right here, round formation as well. So all of this is low resistance buy side liquidity. And then we have all of the alignments that we talked about right here, and we arrive to a situation. Then we have all boxes ticked. When we have, let's say, our entry, everything nicely aligns, we get our entry, and we are pushing towards low resistance buy side liquidity pools, meaning that we don't have any barriers in our way. If we take, let's say, a long position right here, pushing towards the magnet area. So let's say this is our magnet area right here. I'm talking about a lower time frame, higher time frame, draw on liquidity. Then in this area from the entry to the take profit right here, what we have is not high resistance structures, not high resistance highs and high probability bearish PD rays blocking the way right here. In this case, what we have is low resistance buy side liquidity pools, actually pulling the price, acting as a magnet right here. And this is when price can actually blast to the upside easily, because it doesn't have to reach into some PDA, react, reach into some strong structure, react. And usually when they have all that pressure on the downside, this is when price just gets forced right to your stop loss. This is something that we talked about in the previous example. And when they have clear path, this is usually when price becomes explosive and moves towards your targets in fast manner, in fast behavior, and reaches your drawn liquidity. So this is one of the key puzzle pieces that a lot of traders are missing in their arsenal. And I highly recommend to not ignore this. Pay attention to lower time frame, execution time frame, low resistance paths, low resistance delivery, and obviously don't ignore all the other puzzle pieces right here. Having low resistance path and just entry model is not enough. You need drawn liquidity, you need higher time frame, lower time frame alignment. You need to know the foundation that's causing this trade, because entry model is just the last thing. And a lot of traders are basing and framing their trades only on the entry model. And again, this is just blind trading. This is when you are lost in the markets, pretty much just playing guessing games. We need the whole picture. We need this whole formula in place before executing. And then we have low resistance environment. And again, round formations that are in alignment with the main drawn liquidity. This is when you have a clear path, a clear situation to see your trades run and blast towards your take profit. Sometimes, as mentioned in the beginning of this video, we will not have very clear low resistance environment from entry to take profit, but we will have some middle ground. So what I'm talking about is we will have some high resistance PD rays, high probability PD rays, as well as some low resistance buy side liquidity pools. So it becomes just a 50-50 type of a mix. And that's okay if we have all the higher time frame, lower time frame, middle time frame, execution time frame. Everything is moving in sync. We have clear draw on liquidity. Execution time frames are looking great. This is when we can ignore this part. And if it's looking 50-50, we can push towards it. But if we have very sharp highs, very sharp structures blocking the way right here, causing lots of high resistance barriers for us to reach our main draw on liquidity, this is when, for me at least, it is a no-go. And this is when I sit on the sidelines, waiting for some signs that price is actually going to take out this high first, and only then I look to enter. Or obviously I just choose to stay on the silence completely if we don't get that. So that is all for this one. I hope it was insightful, something I really wanted to cover for quite a while, and I hope this will help in your trading.